Bidvest was founded by Brian Joffe in 1988. It's a South African-based distribution services and trading business and the largest food service business outside of North America. Bidvest has a market cap of 67 billion rand, a price-to-earnings ratio of 14 and a dividend yield of 3%. This has long been the stalwart in anyone's portfolio.
Well, it's amazing really, because 1988 is not that long ago to have built up a group with 67 billion rands worth of market cap. I mean, it's an astonishing success story. I mean, he is really, without doubt, probably South Africa's most talented capital allocator. Something I don't think everybody realizes, he's also a very talented manager. I mean, everybody who works in the Bidvest group seems to absolutely adore him. And he gets the best out of people. He buys businesses which seem to be very unsexy and uninteresting, and suddenly they're achieving record results. The question really is, with a group of assets that distributed, what is the long-term goal plan here? I mean, can it carry on just adding more and more different turrets to the castle? Or is there going to be some big value unlock reorganization down the line? And
perhaps that's the big question, is whether this group is going to become too unwieldy when you look at an industrial conglomerate, just too many pieces, too many geographies to manage effectively.
Well, I think that, I mean, if you focus specifically within South Africa, the market does become too small to expand. Bidvest has a very successful presence overseas. They are moving, they're in Europe, they're in Asia Pac, they're moving more into Eastern Europe, they've started moving into South America through Chile. So I think once you start looking at it from a global point of view, there's a lot of opportunity. And it's not that they're taking a whole lot of different business models overseas. They're basically using their food service business model to go into these offshore locations. And I think that there's a very good chance that they'll be successful.
If we look at the graph here, Paul, it's done very well of late. We're around about 210 Rand on Bidvest.
Yep, which is an all-time high. They've put their nose up above the 200 Rand mark. They're sitting at around 209 today. I don't know, that's the tricky thing, because you know, you can certainly own and buy the shares just on the basis of the earnings. It's not that expensive. It's got a great dividend history. It pays out lots of cash. As I say, they very rarely make any mistakes, and it doesn't really matter if the businesses don't all fit together as long as they're all firing at the same time. From here, I'm not sure though, because a couple of months ago there was that approach from some unnamed foreign food service business that wanted to buy out the food service business, and the board had a careful look at it and decided, no, we want to continue this on our own. So, I mean, does that become the future theme? Is it likely that perhaps there'll be a reorganization of the business on global lines? Could they do a deal where they merge up their local logistics and transport businesses with another local player like Imperial? Or is it just going to be more of the same? Brian is 63 or something like that. I hope I'm not getting that wrong.
He's a spring chicken.
Exactly. I mean, his designated sort of successor apparently is David Cleesby, the financial director, who's younger even than him. So, I mean, that's not to say that there's an immediate plan to do something, but I must say, personally, I love this kind of situation, where there's a potential for a unbreaking or unlocking of value through a slow reorganization of the group, where, you know, the market goes through these cycles of consolidation and splitting up, and I think it's heading for the splitting
Daniel,
up.
is that the key to unlocking value here, that we actually see the group disbanded, pieces of it unbundled? Is that where value will come from?
Well, look, I mean, I think you can see that the stock's been creating value as is. Maybe you could argue that will bring forward a very quick realization of value that might not last because it might be unbundled to someone who doesn't manage it as well. I think, like Paul pointed out, the unbundling, so to speak, of that element of their business that was discussed a few months ago points to the outcome of that points to the fact that there's unlikely to be anything significant soon. The guys are happy with the conglomerate and growing it the way it is.
Unless it really makes sense, they're not going to let go of any of their
assets.
Unless
it really, really makes sense, I don't think they're going to be letting go anytime soon. And having said that, I don't think it's a massive, I don't think it's going to be to the detriment of growth. Yes, it might be that you could bring the growth forward if you're unbundled, but like I said, the business has been creating value as is.
Hot or not on Bidvest, Paul Theron?
No, I like it. I own it personally. I've got the idea that there's more good stuff to come here, either, as Daniel says, Plan A or the potentially exciting Plan B, both of whom are hot.
Daniel, from your side, hot or not on Bidvest?
I think business has got pretty much everything that you're looking for. Stable business, cash generative, exciting upside from the food service business going more global. And I don't think it's that expensive. I think its forward multiple is in the low teens, so I would say hot.